All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to go over a couple different things that I feel are very important. I want to touch on the overall market. As you guys know, right now in the past month, we're down about 7.47% in the S&P 500. What I want to touch on is this potential market crash. Is this just a correction or is this a crash? I want to talk about some key details such as tariffs, for example. I understand that the market is currently experiencing a little bit of an uptrend. We're up about 1.48% in the past week. It's nothing crazy, but it's relief from this huge negative 7% kind of crash, I could say, over the past month, because really the market has crashed over the past month. And what I want to do with this video is I want to show you guys to keep to your plan and stick to your plan, because investing is emotional. 1 second, we fear the crash, and then if the market rebounds, we think the world is good once again and everything is rosy. But the thing is, markets don't just go straight down and straight up. And what I've done is I've picked up some stock market charts from 2008 and as well from the 2000 crash. I want to show you guys how markets trend down so that we can look at our own market and say, okay, are we experiencing a bull run here, or are we continuing the downtrend? And in my opinion, we are only going to continue the downtrend, and I want to talk about some reasons why. So if that does sound good, we're currently up to 7,700 subscribers right on the dot. 167 subscribers in the past 28 days. So if you haven't done so, subscribe to our channel, because I try to provide you guys as much value as possible in the least amount of videos as possible. Of course, I make videos when they're important, like this one. So I'm investing in not SPY, but SPXL. I like to get an average share price of about $100. That's my goal. I got a couple goals. And really, I'm not buying too many Yieldmax ETFs at the moment. The only Yieldmax ETF I recently bought was not YMAX. It was actually SQY. Today, I purchased 50 more shares of SQY because in the past 6 months, it's down 35%. The underlying stock block down as well. Pretty huge in the past little while. If I go to the last month, down 26%, and I believe it's undervalued. So what I did was go into my orders here. I just want to show you super quick. SQY, 50 shares at an average share price of $11.68. That is going to drastically reduce my average cost per share. And if I go here to SQY, my current cost per share is $16.04. A lot further down than when I was currently at $19. I believe there's an opportunity. That's why I bought, but I didn't invest much. I only invested about $500 worth. And the reason being is because I still see more downside ahead for the market. We're currently at a time period where the market was close to an all-time high. We trended back down lower than previous lows, which can kind of indicate the start of a downtrend. When you look over the past 5 years, you could see, okay, we had a slowdown in 2022. We're likely going to experience a slowdown in 2025 just due to the fact that we've had pretty much a bear market for the past 2 years. We've seen no slowdowns, so slowdown is almost evident. And then on top of that, we have Trump's tariffs coming out. I think a lot of people forgot about the tariffs. Of course, they're a huge factor, they're a tax, but tariffs don't really affect consumers until prices, of course, hit shelves. And then at the same time, it takes months for these to develop. Now, the US has introduced a 25% tariff on all steel and aluminum from around the world. I live in Canada currently. I'm not a US citizen. I'm a Canadian citizen. And we are, of course, all talking about the tariffs here, 25% tariffs. And the real reason that I also wanted to make this video is because I want you guys to remember that Trump could potentially add more tariffs starting on April 2nd. April 2nd brought up the calendar here. We are right here at March 19th. April 2nd is right here, 2 weeks away, exactly 2 weeks away on the Wednesday. So 2 weeks from now is when we're really going to see potentially the full implication of all the tariffs. And then it will take months for the real financial burden of these tariffs to unfold. So that's what I want to keep in mind. I want to keep in mind a long-term perspective. Don't just think, okay, the market's up 1% today. It's up about 1.5, 2% over the past week. It looks like we're getting out of this. I want you guys to keep a level head. I want you guys to accumulate cash for potential downside. That's what I'm currently doing in my portfolio. And I understand certain stocks today were up. For example, SQY was up about 1.3%, which is cool. SMCY was up about 5.3%. And then, of course, MSTR and MSTY up about 5.34%. So there was some really good gainers within Yieldmax today. Even Yieldmax itself at 1.58%, which did better than the market, about 50% better. But you guys got to remember that we are currently in this downtrend, and that's where I believe us to be. And so with the news of in 2 weeks, potentially more tariffs along the way, I want to stress that I don't feel that we're out of this. Of course, it's not financial information. This is only my opinion, but I do want to say watch out for April 2nd and watch out for the reaction from the market, either positive or negative. Now, the last thing I want to touch on in this video is how markets react to the downside, because we've seen a pretty sharp downtrend here in the S&P 500 from roughly about February 18th to March 13th. This was a downtrend of about 7% in a month. But when we look at the S&P 500, we go back to 2007. You could see here just right at the top, it's a very small blip. It's nothing crazy. Oh my goodness, I'm going crazy here. There's a small blip as the downside, which is what we could potentially be seeing. What I want to show you guys is look how the market reacts from the top of 2007 going into 2008. It trends down, it trends up a little bit, and then it falls back down hard. It consolidates a bit, goes up again, falls back down hard, and then eventually falls straight down to 2009. Why am I mentioning this? It's because we're currently in a period where the market's trending down. The market's going to likely trend back up a little bit because it's not going to just go straight down. That's not how markets work. And we could potentially see further downsides like this one or even greater ones. This, of course, is a very bearish analysis, but I want you guys to be prepared for the downside and have cash in order to take advantage, which cash in the form of other assets. You could buy silver. I actually recently bought silver at $46.49. So I'm up almost $2 on that position. I bought a kilogram. It's nothing crazy, but it protects yourself. And silver over the past little while, usually when crashes hit, you'll notice 2020, silver rose in value. 2025, a crash is potentially on the way. Silver is currently rising in value. We go to 20 years. If you don't believe me, 2008, silver rose in value. So with the spike in silver, I seen this in 2020, it could potentially mean that we have a lot of negative sentiment around the market and people are looking for other places to put their money. But the main thing I do want to stress, even going to the 2000 crash, markets don't just go straight down. They take time to crash. It's only been 1 month and there could be potentially more pain along the way. Expect the markets to retreat up a little bit, but me personally, I'm not biting into this. I bought a very small position in block because for this, my margin account, you could see here, I'm down about $250 in terms of margin debt. This will be paid back by my dividends for this week. I'm not reinvesting any of my own cash for this, simply dividends reinvested. I'm building cash on the side to potentially invest and watch out for further downtrends. So if you guys did enjoy this video, we're up to 7,700 subscribers right on the dot. Let's change that hopefully to the upside. I really hope you guys enjoyed this video. Hope you guys thought it was valuable with some news, and then as well, kind of some psychology around the markets and how I feel they might potentially move in the future. So if that does sound good, you guys know what to do. Please do take care, and I hope to see you guys in the next.